You are listening to ChartingWealth.com for Monday, the 1st of August, 2016. Hope you've already listened to our weekly review and forecast. If you haven't, please do so. It will help you set your pace for the whole week, knowing what happened last week and what's going to be happening over the next week, news-wise, potentially things affecting the market. Also, it'll give you your stats on where the weekly charts are, which is important for those of you who are using our daily worksheet. If you don't have the daily worksheet, you can get it at the website. Easiest way to get it is to sign up for our newsletter, and you will get a link to that, how to read a stock chart video, and the layout we use at freestockcharts.com. Some of you ask, what is it when I watch the videos that I see on the screen? Well, that is the freestockcharts.com website, and it is and again, it's all on the cloud. It's all web-based. You don't have to upload anything. You just go to the site, and guess what? It's freestockcharts.com, so it's free. Go there, sign up for an account. You can then download our layout. You don't have to create your own, which is rather complicated. They have others that you can use, but we prefer ours, and we'll give it to you for free. And then you can use that. We actually give the instructions on how to make sure that you download it correctly. Very easy to do, I assure you. Let's jump in and see what we see. We always start with IYY, which is, of course, the total market index fund. It represents all the stocks. And on the two-day chart, we seem to see a leveling out. The market has continued to struggle up a little bit, but boy, it appears to be getting long in the tooth. We are still in confirmed up move on the weekly and the two-day chart, although the two-day is losing energy as far as the derivative oscillator goes, and the up movement has been checked. It is slowing down, but again, the market was up on Friday, 0.22% overall, still confirmed up move on those charts, but does appear to be weakening. Now let's look at our intraday, that's the 4-hour chart, see what we see. Of course, our two-day trend line was broken back on the afternoon of the 27th of July, but we saw over the course of Friday the 28th, strong up movement in the morning and the afternoon. Like we said, market up 0.22%. Derivative oscillator is losing its downward energy. In other words, it's gaining upward momentum. And we see the MACD and the signal line getting closer to crossing over, going up. When that occurs, you will then have a confirmation on your short chart to get into an up trade. If you've not already done that at any of the pullbacks on the Heikin Ashi candlesticks, some of you have started doing that because you found the Heikin Ashi when you have a pullback. And again, for those of you who don't understand, when we say pullback, we mean a movement on the shorter chart in a direction opposite of the movement on the big chart. Why? Well, you can't typically jump into the market when it starts going up or down if you're using an inverse fund. You just don't know when to jump in. It might be a false move. You buy way too high and get screwed. So what we do is we wait for a pullback. That is a move in the opposite direction. We saw that happen back on the 19th of July. And then once that movement ends, and sometimes it doesn't end, sometimes it literally pulls the big chart over in the direction of the down move on the shorter chart. That hasn't happened yet. If indeed the market turns over and starts moving up, which it looks like it's getting ready to do, but it hasn't confirmed yet, once that happens, that's the safest time for you to jump in and ride that wave, either up or down. So keep that in mind. If you really want to know what we're talking about, I encourage you to go listen to the first chapter that we've recorded and put online, first available at YouTube. You can go right there and listen to it. It's recorded under the trainings. We've actually categorized. A great suggestion from one of the viewers. Hey, why don't you put all the stuff you do in categories? We have them in categories now. The daily reviews, the weekly reviews, and the training. You can also go to ChartingWealth.com, our website, and look under training and find that same chapter 1. That will give you a lot. Also, when you subscribe to Charting Wealth, we send you how to read a stock chart, and we explain all of this and show you in detail what it's all about. It only takes about 15 minutes. So we're looking for a potential crossover going up. Hasn't happened yet on the short chart. Now let's go back to the two-day chart. Move right on to SPY. It was up 0.16% on Friday. Looks very similar to IYY, the total market, sliding sideways, those S&P 500 stocks. We do see a diminution in the up move. It's slowing, So we'll just have to see what's happening. Now, of course, you know one reason for the move slowing is when we look at the 4-hour chart, we see the market slipping sideways for many days, and it did start moving up, moved up just like we saw on Friday, moved up pretty substantially, 0.16%, but on the Heiken Ashi, the average pace candlesticks we used, pretty significant up moves there. Derivative oscillators lost a lot of its downward momentum, and we are getting closer to a crossover going up. If and when that occurs, that's your time to potentially jump in on your virtual trade. And we always say virtual. When we talk about trading here, we're not talking about trading with real money. We're talking about your practicing. We're not a stock calling service. We don't get paid to do that. We are here to teach you how to read these charts and develop your own method of trading. When you get good enough and feel good enough, you make your own decision about what to do with your money. First thing, don't lose money. And if you start gambling and you start thinking you know what you're doing when you've not practiced and assured yourself you do, you will lose money. I can guarantee you the market will take it from you quicker than Las Vegas. All right, let's go back to our 2-day chart. 2 more charts to look at it before we wrap things up. The next is the Qs. What is the Qs? Well, that's the NASDAQ 100, and it is a pretty chart with lots of up movement, much prettier than we see on the S&P 500 and the total market. The NASDAQ 100 has been moving up nicely. We have a beautiful trend line. We can't even draw trend lines still, any accurate ones on the S&P 500 and the total market because they've slipped sideways too much. But the NASDAQ 100, we can. Confirmed up moves, derivative oscillator still building, and we see the MACD and signal line continuing to move up and stay apart. In fact, grow further apart. Now, let's look at the 4-hour chart, see what we see here. And of course, we've seen, did you catch it this morning where the market flipped over? Did you jump in? Hopefully you jumped in way back when the market turned back over, back on the 20th. Look at this gain. The highest you could possibly have bought in, 1350. If you would have bought in at the opening, 1217. So somewhere in the middle there, you would be up 1532. That's real money in anybody's book over what, a 12-day period? Not bad at all. And again, when do we find these trades? We don't find them all the time. Do you have to find them all the time if you're doing that kind of return? No, you don't. That's why you don't get greedy. You don't get impatient. You watch these charts. And again, the first rule, don't lose money. Don't take unnecessary risks because it's so much harder to make money back when you lose it. You've already worked hard to earn it. Then, when you do see an opportunity, take it when it makes sense, when you're not being greedy, when the charts are really telling you it's set up and ready to move, and then watch yourself go. And be willing to take your profit at any point. When you feel good about it, take it, get out, don't look back and say, oh, if I just would have stayed in, I could have made $500 instead of $200 or $50,000 instead of $30,000. Be happy with what you have. Now, you can look and learn for next time when you're still training. But again, it always is easy to be a Monday morning quarterback. That's why there's so many people in the broadcast business that aren't in the market. If they were so good, why are they not in the market? All right. So keep that in mind as you look at these charts and figure out what to do. So lastly, we're going to go to the weekly chart and we're going to look at gold. Gold was up 1.03% for the day. What do we see? Oops, I went to the weekly chart instead of the 2-day. What do we see on the 2-day chart on gold? Well, gold is in a confirmed down move on the 2-day chart, still in a confirmed up move. All of our charts in confirmed up moves on the weekly chart, some just barely. But what we see on the 2-day chart is gold is trying, it looks like trying to move back over. Derivative oscillator is still very negative. We don't have a crossover yet going back up. So gold's in a confirmed down move right now. If we look at the 4-hour chart, what do we see? Gold crossed over, going up. So in other words, it's backing up. How's it backing up? Because gold's moving in the opposite direction on the 2-day chart. It's confirmed down. So when it backs up on The 4-hour chart, it does that by going up. If gold then rotates and starts going back down and crosses over, that's then your entry point into getting into that down move. But remember, the big chart in gold is still in a confirmed up move. So getting into a down move has its concerns because gold is still in a confirmed up move. But again, before you make any of those kind of decisions, if we do see a crossing over going back down, it's worth looking at the weekly chart, seeing how strong is that up move and how strong is the down move on the daily or the 2-day chart and on that half-day chart. So again, this is what we're talking about. You experiment, you practice, you learn. You learn how each of these indexes works different times of the year because things do work differently. Summertime trading zone typically is herky-jerky. Fall-winter trading zone is where the gravy is. Plenty of folks that only trade fall-winter. They set aside time to trade in the fall-winter trading zone because they don't want to take the risk in the summertime with the low volume and the herky-jerky action. They wait till the fall-winter to actually trade and trade well. So again, let's practice, find out what kind of time you have, what you feel comfortable with. Maybe you just decide to follow one and only one index to trade. Maybe it's the Qs, that's my favorite. Maybe it's the S&P 500. Maybe it's gold. I don't know. You need to find out individually what's good for you. And we're here to help you practice and figure that out. And that's why it's so important that you keep this diary. That is your daily worksheet, because then you can go back. You can have your lessons annotated there. You can figure out what you did right, what you did wrong. And you can actually Monday morning quarterback in a good way. That's going back to learn what your mistakes were. Like that football team that watches the reels. You know, they watch all the plays from the prior game to learn what their mistakes were and to improve. That's what keeping that daily worksheet is going to do for you. You want that again? It's available if you subscribe to the daily podcast. Just go to chartingwealth.com, put in your first name, your email address. We'll send it to you. Hey, you want to help us out with what we do for you free every day? Ask you 2 things. First, go to iTunes, subscribe to the podcast, give us a 5-star rating, say something nice about us. You've already helped make us number 6 or 7 in the world as far as stock market podcasts go, and we very much appreciate that. Second, we ask you, go to YouTube, subscribe to our Charting Wealth channel. Why? Because once we hit 1,000, I know we have several thousand people listen to us every week. Once we hit 1,000 subscribers, we can then provide you with proprietary broadcasts, and we're looking forward to that day. We're already 800 and something. Please keep pushing those numbers up for us. We are not far away now. We can smell it. Thank you so much, my friends. We love to hear from you. Please follow us, Facebook, Twitter, Instagram, YouTube. Let us hear from you. Let us know what else we can do for you. We wish you the best. God bless you from chartingwealth.com.